We're now serving over 30,000 customers a quarter, growing at 20-30% quarter on quarter, circa 100% year on year.
Ed, welcome to The Bottom Line.
Thanks, Sevan.
I'm really excited. Pay.com.au is an amazing brand. You're the CEO, and I'm so excited to have you on The Bottom Line today. But before we get into your role at Pay.com.au, we've known each other for a long time, so I know your story really well. But for those that don't, I'd love to hear sort of unpack your professional journey and how you ended up at Pay.com.au as the CEO.
No, thanks, Sevan. And we have known each other for a long time. And I think we're actually born only around a week or two apart.
Correct, yeah.
A brother from another mother. And both chartered accountants.
We are.
So some similarities, and now it's a pleasure to be here today. Look, my journey is interesting to a degree. I wouldn't say that interesting. But I started out, as I mentioned before, training as an accountant. I probably never thought I would do that. I was actually way back at university. I did like a typical young guy. You don't really know what to do when you finish school. I did love travel. So I spent a year traveling when I finished school, took a gap year and worked as a sports teacher at an English prep school. Did a lot of backpacking, having fun, etc. And then came back and just commenced a standard business degree at RMIT University, actually majoring in marketing. I've always liked that sort of, I suppose, creative side of the brain, which is, I had a great time doing that. But I was always, enjoyed maths and numbers, etc. So I ended up back in the UK around 2003-04 and joined Ernst & Young, actually in a role, more a BD role, sort of helping their turnaround team identify companies that would need advice. And then one of the partners said to me, look, we think, you should definitely do your chartered accountancy degree. In the UK, you actually go and do it at college, unlike Australia. So you actually go and study with friends. It was fantastic.
So it's not like a postgrad. It is postgrad, but it's at uni. It's a little bit more not as self.
Yes, yeah. And look, I learned a lot from, particularly if I think now about pay and our recruitment, a lot from Ernst & Young. So they would recruit the person and the brain more than the degree. So I remember, day one doing your chartered accountancy degree, they would actually prefer candidates who had studied, geography at Oxford or politics or philosophy, because it was more about how they would think. So they would actually prefer candidates that in effect didn't come saying, I know my debits and credits.
Yeah.
Because they would like you to basically peel everything back to the start and then build it their way. So I ended up becoming a chartered accountant in Scotland, and probably that's when the points addiction started to evolve. I ended up on a job in Moscow, of all places.
Wow. So you've been to Moscow?
Which for quite an extended time. It was when Moscow was relatively safe and politically, but also even entering the country was fairly fine. Like a lot of firms, any flight north of 3.5, 4 hours, you travel business class. We had teams flying out Sunday night, London, Moscow overnight, back on a Friday, as you do when you're in that consulting space. And I worked out pretty quickly, well, hang on, there's between 4 and 8 of us flying every Sunday at £2,000, probably more.
Yeah.
I went and thought, well, Ernst & Young's a pretty good, risk taker. For me, if I put these fees or put these airfares on my credit card, I went and got myself an Amex British Airways card.
Yeah.
And I said, oh, guys, I'll pay for all the flights on this card. Obviously, you're going to get reimbursed, and racked up hundreds of thousands of BA points, because there's obviously top-ups when you buy a British Airways ticket on a British Airways card. There's all the bonuses, multipliers, etc. And when my wife and I got married, much to her surprise, we ended up on a business class airfare to LA, which, at that time, there's no way in my salary when I was back in Australia could have afforded that. So I'd always sort of worked out there's this incredible arbitrage on the points game. Never really understood how it worked for the airline, how it worked for the credit card company, etc. But, I could probably work it out pretty quickly that it worked well for the consumer. So I ended up spending, circa 4 years in the UK, came back, joined Ernst & Young. Back then, the GFC had just occurred or was occurring. So I ended up actually moving to ANZ Bank with Ernst & Young's blessing to work in their turnaround team.
Yeah.
And that was basically helping files that had got themselves too indebted and were in trouble. Really enjoyed my time there at ANZ, still very close with a lot of that increment of that part of the economy, particularly that insolvency space is very, very small and tight.
Yeah.
I've still got a WhatsApp group, as many people do, with some great guys who have all gone on and done very different things. Some are still in the industry, some are running their own businesses, some are still working as advisors. And then I joined M&A Partners, where we came across each other, which was a mid-market advisory firm. Again, I still look at my career always been sort of building a solid base, chartered accountancy, get to know banking, how capital works, how banking works. M&A was more on the sale of businesses, the raising of capital. So learning more about, cost of capital, how to raise capital, both debt and equity. And we were obviously a part of a couple of sales that you referred us to, which is fantastic. And then I actually met a guy called Marty Waller, whose uncle or nephew is Damien. Damien's uncle is Marty.
Yeah.
And got to know Damien Waller, who'd founded iSelect back in the 2000s. And iSelect was a part of that sort of founding companies when car sales, REA, a lot of the print had gone to digital.
Yeah.
Ended up going in-house, which was a great move. And it's incredible because the four people who we were together, it was Damien as chair. I worked as head of corp dev under him. David McCall was head of strategy, who was my peer. And then Richard Burke worked under us as the analyst. And the four of us then bought, after spending a great time at iSelect, Point Hacks, which you guys are still involved with as our accountant. Point Hacks is Australia's leading frequent flyer forum. You'd probably put it over 250,000 visitors a month. It generates revenue via credit card leads. And I CEO'd that when we bought that business. That was my first step into, I suppose you'd call it, a CEO role, and really enjoyed that because I had 10, 15 years of experience before stepping into that role. And, you look at those books about how many hours you should do if you're going to become a professional athlete or whatever.
Yeah.
I've done numerous hours. Particularly Ernst & Young UK, you do pound out long hours. There's definitely no work from home at Ernst & Young.
No.
If you worked from home, you'd be told to go and visit the recruiter the next day.
No, definitely not.
And if you had to stay till 4 a.m. and go home, have a shower and come back by 7, that was expected. There was no ways about it. It's a very different culture to probably how, some people work in Australia now. And we CEO'd Point Hacks. It was a great business. It still is a great business. The four of us are still directors of that company. And then we spotted the opportunity, probably harking back to all of the opportunities using points and working out the arbitrage, that there was just nothing in Australia that enabled small businesses to put their expenses through some form of platform, use their credit card where the supplier or the payee can't accept card, and then build our own reward, actual network and currency being pay rewards. And, the business has gone from an idea on a whiteboard and a bit of paper, as we were just talking about pre this conversation. And, you sort of illustrated the hockey stick and how we're going to execute that. And I don't think I've got too many things right in my life, but this one has been absolutely phenomenal. Its growth has been extraordinary. And, we're now serving over 30,000 customers a quarter, growing at 20-30% quarter on quarter, circa 100% year on year, hugely addressable market of over 2.7 million SMEs. And it's one of those really unique businesses where everyone kind of wins proportionally. And I remember Ant Eisen, who founded Afterpay, we've raised around 3 or 4 rounds of capital via Hugh Robinson, who's now at Morgan's, was at Bell Potter, and he raised a lot of the Afterpay capital early as well as floating that company. So he introduced us to Ant. Ant came and had a chat to us. He didn't invest. I think he's got too many zeros in his bank account to worry about putting any money in.
I see. He'd be kicking himself still, but...
Yeah, probably.
Yeah.
But I remember Ant after about 15 minutes, and he's an incredibly sharp guy. He just sort of paused, and he's very sort of deep thinker. And he said, hang on, this is an incredible business, because my understanding is that the airlines are all getting incremental revenue that they never would have got. So they're winning. Your customers are saving money, using it for working capital, using it to reduce their OPEX. So they're winning. And you guys are clipping the ticket on sort of 3 or 4 different areas, but you're not, say, making crazy margins, but accumulates to a nice margin. And then he goes, they're the best business models, because as soon as, like anything in life, someone's out winning each other in a relationship, generally it's not going to be a long-term sustainable relationship / business. And, what we've built has probably been that, 15 years of accountancy, banking, advisory, working inside a corporate, accumulating all that particularly across the founders and the original board, and really building a very, well-constructed business plan that was not thought of overnight. We spent many, many hours, we like to use that term, sort of turning the pebbles, really spending lots of time making sure that when we launched it, we had it ready to go to be scalable and to accelerate to where we've got it to. But to be at this position after launching the business in 2019-ish, we're now 2026, to be sitting there at, we'll do over 3.3 billion of transactions this quarter is quite incredible.
Yeah, it's remarkable. My story is amazing as well in terms of being involved early stages. I remember, must have been a few few hours of meetings that you guys had before you sort of rolled me in there. And I said, and because I have access to a lot of the SMEs, it was a really, an interesting conversation where you were kind of picking my brain around, whether the SME market would be, open to the platform and would they actually use it, and what are the challenges that they have. And you've been involved with SMEs, and it was just a penny drop moment. And I had my ex-business partner who's since retired, he's a points fanatic, with us in the room, and he's like, this is gold. Like, you guys are on the money. But what I remember vividly, which we spoke about earlier before we press record, was how Damien had you guys had already done a lot of the work. The platform was sort of a beta. We were doing some work behind the scenes with you guys, but you guys pretty much summarized the business and the vision and how you wanted to sort of grow it. And we were modeling the financials, and, if we do X number of transactions per annum, blah, blah, blah. And I remember even Damien, we were getting excited by how big this could get. And he said, no, we need to make sure that the growth is sustainable. And over a period of time, it's not just this massive hockey stick in year 1 and 2, and then it's not sustainable. You need to get the year-on-year growth, build it, and build those foundations. And I remember I put up like this spreadsheet that had like 5 or 6 years. And he said, that's the year where the hockey stick's going to come through and we're going to get this momentum and blah. And I just remember that because then since then, being your sort of your tax agents behind the scenes, we see the numbers. And if you overlaid his little 5-year strategic plan of the numbers and overlaid it on the actuals, back then it was literally, everything you guys said that you were going to do in that business plan or in that vision has been executed. It's like a execution story. And as everyone, as you know, as a CEO, it's not difficult to put strategy onto paper, but its execution is what you live and die by. So I'd love to unpack that for a little bit, Ed, for our listeners that are potentially starting their own little business or a business that they think they can scale. What were some of the secret sources? What were the things that you believe is making pay.com.au so successful today? But what was it in those early stages that allowed you to get to where you are today?
Yeah. Well, I think the other thing that Damien, an absolute credit to him, and we mentioned this earlier before, was back in around 2018, the RBA had their first review of interchange fees, which some of your listeners would know about. That's going to occur in October this year. Some would not know. Basically, interchange fees fund reward points, but interchange fees also help fund innovation. They help fund the maintenance and advancement of payment rails, etc. And the interchange fee is basically the fee that's charged when you use a credit card, and often it's passed on. When you buy a cup of coffee, etc. And there's a lot of talk about this back last year. I think it was with a senator from South Australia. Why is buy coffee $5.15, not $5? And it created a lot of momentum. And then the RBA has now come up with a ruling where they're going to reduce interchange even further, down to 0.45. It's going to cause what we think will be very inflationary, because most cafes will just pass the cost of using a card back into their price of a good, which is just going to fuel inflation further. But let's, for the sake of this conversation, not get too depressed. So otherwise we'll be here till Christmas. But I remember Damien also, and I do remember that graph as well very clearly, but saying, guys, what happens if interchange goes to zero? Because we had seen in the UK it go almost to zero. And a lot of credit cards in the UK, outside of my Amex BA story, don't offer reward points. Now, they're a different culture there. They're very obsessed because they've got the advantage of rail. So obviously you can train, if you're an accountant in the UK and you have a meeting in Paris, you're not going to fly. You just jump on the train. It's far easier. It's point to point. It's often cheaper and it's often easier to work on, et cetera, et cetera. But we had seen governments or regulators reduce that interchange fee. And that's when we came about our own reward platform. And that's really the competitive moat that's very difficult to replicate. And probably, as much as us Victorians don't look back at COVID with any great fondness, one of the things that it did offer us the opportunity was to have very, very senior, high-level discussions with our partners. And what I mean by partners is that's Qantas, KrisFly, our airline partners, our hotel partners being Marriott, Accor, IHG, etc. And to get those deals bilaterally, one-on-one, them being open to having themselves compared to basically their competitors, was incredibly difficult to execute if it wasn't in that COVID situation where those businesses, airline companies, their planes were in Arizona and Ayers Rock collecting dust. They boarded up with protective sheets over their airplanes. And the only way they could generate revenue, or one of the only ways, was by selling frequent flyer points. Probably it's a bit too detailed for today's conversation, but it's a very complicated, sophisticated economy, the frequent flyer/reward. It's almost a bit of a dark art. And we were able to have very senior conversations very quickly. I remember being up at my place in Mansfield, Victoria, and, as you do, you go onto LinkedIn, you find out if there's anyone from Singapore Airlines based in Australia. I found a BDM, hit them up with a LinkedIn invite. Literally 20 minutes later, "Hi, Ed, would love to chat." And all of a sudden, we executed a deal with Singapore Airlines. We executed what they call an indirect deal with Qantas, whereby we can buy, our customers convert to Qantas, but they can also revert to now over 14 different airlines. If it wasn't for COVID, would have Qantas done an indirect deal? Would have Singapore accepted that LinkedIn conversation and taken a phone call in the next 24, 48 hours? I would say I doubt it.
Wow.
And then what we really were able to explain to those partners, all about incremental sales and zero CAC. So what I mean by that is that every week we go and spend hundreds of thousands of dollars through above-the-line media. We do a lot of radio ads and billboards, and we spend vast sums with our digital partners. So our partners are obtaining revenue with almost no customer cost of acquisition. So I think, and Rick Berg, one of our directors, is very, very mathematical and thinks deeply often about this, because he's since he left us, he's been doing his own small advisory side to companies. When companies understand their CAC, most companies don't. If you walk down Camberwell Road or up Camberwell Junction today and said to most shops, "What's your CAC?" they'd look at you thinking,
what are you talking about?
But if you understand your CAC and then your long-term value, and then you build your financial model off the back of that, that's how the scalability came. But it also enabled the ecosystem to be value accretive. And we've currently opened up our office in Dallas, and I've spent quite a bit of time in the last year and a bit, and I'm back in the States in 2 weeks talking to the major airlines and the credit card companies, etc. When you're able to explain this revenue zero CAC, it's not cannibalizing anything, they're more than happy to play game. And if anything, the margin for our partners
is higher. It
must be enormous, because if you think about it, only 10% of companies, SMEs in Australia, can take credit card as a form of payment. So, Dandenong, you're a timber seller, I'm a timber retailer. Hey, Sevan, I want to pay my Amex. No, Ed, you just pay me bank transfers. So automatically we're able to open up that working capital opportunity with an Amex card or a Visa or a MasterCard, because Amex have 55 days interest-free, and some of the bank cards have fantastic interest-free days as well. So we're able to obviously provide that working capital solution as well. But then when I paid a bank transfer, so firstly, 90% of those transactions for Amex, Visa and MasterCard are potentially non-cannibalized. So it's fully incremental, high margin business. Now for our partners, when we've created our own currency, if I'm paying you for that timber and say it's $100,000, so it's 1% for 100,000 points, so it's $1,000 that gets paid to pay for that service, because it's a service fee, not a merchant fee. And then I've got 100,000 points and I transfer those into Qantas points, which is a 2-for-1, so 50,000 points. We have to cut a check to Qantas at the end of the month. But Qantas have not paid for me as a business customer. So that revenue is highly incremental, highly valuable, because the other thing which we've massively exposed our partners to is the largest part of the economy in Australia and America, which is the SME space, but it's often the most underserved. And what I mean by that is, if you think about Qantas, they do big deals with the enterprises, whether it's BHP or it's the banks or it's, and there's fantastic. I remember at ANZ, you go onto the travel portal, there'd be a Qantas fare or a Virgin fare to Melbourne, Sydney or Brisbane or wherever you had to travel. There's often a corporate discount, etc. And then obviously mum and dads, they spend an enormous amount of money advertising, whether it's the, choir on the top of Ayers Rock or Sydney Harbour Bridge or whatever. And, customers love Qantas. But that rump of the economy being SMEs is not serviced. So if you and I are in business together and we're, like I said, just use that example for buying timber, and you have to travel to Brisbane, you don't go into a portal with a nice discounted airfare. You're basically going onto a site trying to find the cheapest airfare or use points.
Yeah.
But business owners couldn't get enough points because, one, you couldn't earn points on bank-to-bank payments, which we've unlocked that opportunity. But secondly, you weren't able to optimize your Amex card because circa 10% of suppliers can only take Amex. So the business owners absolutely love it because they're able to earn vast amount of points and they're able to save truckloads of money and enjoy the points for themselves and their family and their friends in a great value accretive way.
Yeah. When we had the conversation in the boardroom and the question was, do you think, Sevan, based on your client base, what do you think the SME market will do? The first thing I thought about was just when we do the accounts for a lot of our clients is, they've got 50 million different credit cards that they're paying their business expenses through because they're trying to get the best points card for that, and they close that one and getting a Citibank from here and a blah, blah, blah. And it's like, it would be a bookkeeping nightmare. And,
it was a nightmare.
And that's what business owners were doing, but there wasn't a place to do that. So my feedback at the time was, definitely there's appetite from a consumer perspective because, as you said, Australia, we love traveling, we love points, and we get it. And those people that got it were in business were trying to figure it out. When pay.com not listed, but pay.com.au set the platform up, it wasn't the fact that you guys offer the rewards and the platform is super cool to use. I know at the time our head of bookkeeping, who you know quite well, got involved with the development team. She was so amazed at how simple it made her bookkeeping as well. So, it's not just the rewards platform. It's not just, it's the platform itself for payments makes things so much easier. And then from an accountant's perspective, I don't have clients, changing credit cards and getting their wife's card and this and that. It's a nice hub. And it's just easy to follow, and we love it. And it's funny, recently we acquired a small accounting firm, and a lot of our clients, existing Alexander Spencer clients, majority of them use pay.com. But it was just interesting to see when we started going through and engaging with these clients that we had never met before. There was a lot of them, a fair chunk of them use pay.com, and it was nice to say, hey, you use pay.com. They're a client of ours. We're involved in the early stages, and you just see the smile on these little, these SMEs loving it. And and a feedback to a CEO, and I'd love to give her name, and you could maybe reach out to her and hear an amazing story. And the story was the same thing. I said, oh, you're a pay.com user, blah, blah, blah. And she said, I know I've been using it for years now, and my husband and I traveled to Europe first class that I never ever thought in my life we could do that.
Yeah.
And she, if she saw you on the street and she knew you were CEO, she'd probably give you a hug. So I have to say, you've really changed the way that not only businesses do business, but also you have opened that, and you are now serving the SME market and offering something that I believe that was, being done in a way that people were not doing it properly.
Well, yeah. Well, it's interesting you say that, and I know exactly who you mean in terms of the bookkeeper. I used another bookkeeper as well.
Yeah.
The one thing which absolutely we did so well, and not everything we've done has worked. We don't expect that at all. We like that sort of that fail fast term, was absolutely to use the bookkeeper for every step, because a lot of your customers, a lot of your listeners will be business owners. They probably trust their accountant/bookkeeper more than anyone else in their organization because they're the gatekeeper and they know the dollars and cents. Yeah, they negotiate payment plans with the ATO. They negotiate payment plans with suppliers when cash flow is tight. They call you on a Sunday afternoon saying, wow, we've got wages tomorrow. We need this debtor to pay us. Otherwise, you're going to have to dive into some funds. So they're incredibly important, and we had to basically make people change behavior, which is never easy in anything in life, but particularly in the world of payments. It's like, for example, accounting software. If we, everyone uses Xero or MyOb or Reckon. If you walk into your accounts team and say, hey guys, I've got some really exciting news. We're changing accounting software packages. You probably get half of them resign.
Yeah.
By the way, Bob and Jenny and James, you're going on Wednesday to a training session. They're like, well, no, we've got our lives. We've got kids to pick up, or we've got things that we do. We're not doing that. So people naturally don't want to make change. So we had to make sure that the platform was built where it was better to use than a software package or paying via a bank. And that's
It really is.
yeah, we've
It's
got
so good.
some great feedback on that, and that was highly, highly important that we made that happen, because then it meant that the fear of change was taken away, and actually, no, it becomes an ecosystem where you can now do your FX, plus you can get paid on points, plus we're just about to launch a very exciting product where you'll be able to offer points to get paid early. So I'll be able to say,
wow.
almost a form of the old debtor factoring, which is the exit of the market when the banks exited with Basel II. So we have this vision that it's already happening, but yeah, even within say 2 or 3 years, as a business owner or as a CFO of a company, you can log on your laptop or your iPad or your phone, and you'll be able to see your accounts, your receivables, your FX, your travel. I've got a couple of guys that need to head up to Brisbane for a conference. You'll be able to do their hotel bookings, find a restaurant. We're using a concierge service that we're white labeling with, where they can then give you 8 different
I've used
options.
it's so good because I've used the concierge service. It's amazing. You just because a lot of time you can accumulate points, but then how do you use them?
Well,
you offer that. It's just the guys in the concierge team are amazing.
Well, we were mentioning earlier, there's 2 interesting customer stories. One is Adam Swab, one of our shareholders, who's been very active in the media through Luxury Escapes. He has a quarterly tech dinner, and we had someone come up to me and said, "Oh, you're the Pay.com guy." Oh my God, I can't believe it. Yeah, my business partner and I have to go every year to, I think it may have been Istanbul. We now go Singapore Airlines. We fly business class. We used to fly economy. We look at the fee like a prepayment and a heavily discount to what we were paying. We're paying less than economy. We're flying business class. We're staying in these great hotels in Istanbul. We can't wait for this. We always know the conference date a year out. So very easy to get seats. And then, I was just recently away with my wife and another couple. We went over to On Points, flew Qatar. It's funny, as we were saying, you're in Qatar airport, you wouldn't even know there's a conflict, 200 kilometres away, and flew back on Emirates. And there's absolutely, for any of your customers out there, there's no problems flying those airlines. The rest of the world seems to have got on with the job. But I was in the Qantas lounge in Heathrow with my friends. He saw one of his buddies. He comes over, sits down. Where have you been? I'm flying today because I'm flying on points, and the only way to get a business class seat was to fly on the Qantas flight to Singapore, Sydney, Melbourne. But actually, it's even better. I've just been to the French women's and men's finals. And I said, oh, wow, I love my sport, as you know, and I'd love to go to the French Open one day as well. And I said, oh, how'd you get the tickets? He said, oh, no, I'm like on this platform called Pay.com.au. We put through millions of dollars. I could only travel on Monday. I couldn't travel on Friday. Through a core, I managed to cash the points in for French Open tickets. So even I didn't know that. I'm like, oh, well, tell me the hack. And obviously when he was telling me the story, for once I was being quiet, and I could see Geordie and Charlotte were chuckling, and they said, well, you do know that Ed was founded Pay.com.au. He said, oh my God, actually I want to put money into this business. So,
well, we'll talk about putting the money into the business in a second. But what's another hack? Not a hack. What would you say the other success? The reason that success, early stages. What else did you do right as a board, as a collective, that made this business so successful?
Yeah, well, I think branding and marketing is incredibly important, and we had a few different brand names very early on. And credit to Damien again. I mean, he was the founder of iSelect and was one of the first buyers of Google AdWords in Australia. I mean, I think he was buying, the health AdWord at cents.
Wow.
Now I think, when I was at iSelect, it was getting up to crazy prices. But definitely the brand name Pay.com.au was incredible. And we managed to find that. We used a broker because domain names are valuable. If they find out who we were, it would have been very difficult to obtain. It was, again, an amusing story because we paid.
I love this.
Yeah, we paid a fair price for that. And the guys who sold us the domain name were down in Melbourne, and they run an ad agency, and they contacted us and said, hey, we're interested to know what you're going to do with it. They came in, we had lunch with them, and they're like, oh my God, we absolutely love what you're doing. Can we actually invest? So pretty much the amount of money we put in for the domain name, they then put back into us as equity. So I think the branding was incredibly important because we were asking people to part with their money. And look, everyone's aware that there are numerous frauds, and you only have to look at your junk mail every day overnight. There's so many different ATO frauds and bank frauds and supply frauds. So that trust of the brand name, pay.com.au, and I think Damien was fixated on a 3-letter domain name.
Yeah, he was actually. Yeah.
As you said, if you think of all of the major brands, it's very easy and simple to remember, which is great. I think Pay Rewards is also a great name, and Pay Rewards is our US brand because unfortunately pay.com was for sale, but at tens and tens of millions of US dollars, which we're not going to spend. So I think the branding early on was very, very successful. And probably one of the greatest things we've got in the company is our people, culture. And what we did, we really have had a ridiculously high rate of success of getting talent on board. But what we've also been very, very conscious about is making sure that all of our staff are shareholders. We run a quarterly shareholder update, as you know. We're very transparent with our numbers. I think if you're fearful of your numbers being in public, then there's probably something else you're fearful of. We have not from day one been worried about that. We've just ploughed on with our strategy, and if people try and copy or obtain our numbers, then good luck to them. But we think that we've got a great resilient business. But our staff are very engaged. A lot of them, at each, as you well know, at each of the early rounds of capital, even the past round of capital, we always offer our staff the opportunity to invest. And we often, when staff join us, we offer the opportunity to invest as well. And we try and help them out back in the day when it was a bit easier to offer sort of
ESOPs,
et cetera. We would offer top-ups, et cetera. So we're not scared of dilution to make our staff business owners, because it's that old story of if you drop the spanner on the ground, you don't just let it sit there and gather dust. You pick it up, you polish it, you put it back, because you own a part of that spanner. And our staff are incredibly engaged. A lot of them, eventually one day, if we were to sell or list, and we'll get onto that, some people will make some life-changing sums of cash. And, as you know, I've got a small truffle farm up in Mansfield, and we took the finance guys up about this time last year when we were pre-planning our budget for the year. And we've got a fantastic finance team, obviously one of your ex-staff who's from India. We've got it's really the United Nations. We've got an Irish, French, now an Italian. Our CFO is English, so there's even an Australian in the team. And I remember we were sitting around the fire pit, as you do when you're in the countryside, just having a drink and a bit of a chat. And I remember asking everyone, how old are you guys? And I don't think anyone was above the age of 30. I'm obviously above 40, unfortunately. I think Ed's about early 30s as well. He's incredibly young. And I remember getting back and asking for how much equity they had. And I was looking at the equity, and some of these guys are sitting on some serious sums of cash that I definitely at that age didn't do, and they all deserve it because, my kids are in a lot of swimming squads, so I get to work at some crazy hours because I like to sort of clear the day and get it ready, and often just walk around the office just seeing, who's around, or get a coffee, or ask if anyone wants a coffee or anything. And the amount of staff, particularly that team, that are in at some pretty crazy hours, punching out some high quality work is incredible. So culture has been massive. And when we don't run town halls like, every third Monday of every month, we're quite sporadic about them. And we recently had a town hall in our recent new office, and our chairman, who's from Ireland, was out. And the town halls are not about me, because I've been in so many of those town halls where the founder or the CEO, basically, it's just like someone just listen to me for the next hour. I'm like 2 to 3 minutes only. Get the hell out of there, get a beer or a wine. And then we roll out numerous stuff, and the engagement. And John said to me afterwards, and he was very, very early at Google, LinkedIn. He's on the board of OpenAI Europe. He said, I don't think I've seen a vibe or an enthusiasm of a town hall since the very early days at Google. He said, this is like something I had no idea about the culture that you've built. I said, well, look, John, most of these staff have equity, serious amounts of equity, and they treat themselves as business owners. So we empower people. We try and limit meetings. We do follow, you love him or loathe him, but we do follow a lot of what Elon Musk says. If you're in a meeting and you're not contributing, get out. We talk a lot about the cost of a meeting. I go to some meetings with bigger companies, and you look around, there's like 10 people there. It must be costing them hundreds of thousands.
It's funny you say that, but anyway, keep going.
Yeah, so we try and limit, it's some stuff don't. Probably this is an interesting one. We do even try and limit annual reviews. I know myself, like back in the day, what you get to the end of the year, then you have to write this balanced scorecard that takes you a week to write, and then you get reviewed. And if you like if the person likes you, they give you a pay rise. If they don't, you probably stay the same. Well, we try to do continual evaluation, but we also limit annual reviews because, to be honest, it's just a waste of time. I think everyone knows if you're doing a good or bad job, and we try and give in moment feedback so that the staff are getting feedback on their performance, but they're not sitting there having to write 10-page balance scorecards that I had to do back in the days of ANZ that no one knew what they were writing anyway. And one of the other big things about that is it really empowers people to to own their job, and they know, deep in their heart, they know if they're doing a good, bad, indifferent job, and we encourage people to come forward and if they're struggling or if they're looking for a promotion or a career advancement, etc. And I also follow a lot of theories. I'm not sort of some deep reader of numerous amounts of business books or whatever, but there are two that we do follow. One is McDonald's came up with 3 things: medium, small, large. Now the reason is particularly the male brain can only handle 3 things. Now, guess what's the most profitable? Obviously the medium. Most people go for the middle. So we only try and limit 3 KPIs per person. So my 3 KPIs are total transaction value for the day. We look at sign-ups, and I look at how many points out of our program have been redeemed. Because from those 3, we then cascade everything down and no more than 3. And the other big thing is if you look at firefighting, any fire truck that has more than 5 people
I know the firefighting one
fails
dismally.
So 5. Elon Musk is a big believer, maybe not in the firefighting theory, but particularly on direct reports. So look, a couple of people probably do have more than that. But generally, for including myself, I only have 4 direct reports. So we try and keep it incredibly flat, but also we don't want empire builders because that creates cultural issues. So you want very flat, very empowered teams, but very limited, basically reports that flow up because it means that you get much greater productivity and much greater output per person. Because otherwise, all you do is you just end up going from meeting to meeting to meeting, and you become a paper pusher. You don't actually get in and get stuck into the business.
Interesting.
So we really try and limit as many direct reports as we can, 3 KPIs, and try and keep it in that family, collegiate, business owner culture.
I love that. It's funny. I won't say it online, but the way you talk about meetings, we've been talking about our meetings. We probably have gone a bit overboard in the number of meetings we have here at Alexander Spencer, and I've got a new staff member, and she did exactly that. We were at a meeting last Friday, and she said, how many meetings is that? How many people? And as you know, being in professional services, we have an hourly rate that we sort of have, and she says, fuck, you've got about $500,000 of dead money over the course of the 12 months of these true bullshit meetings.
Yeah.
And I'm like, but we have to have them. And I started getting uncomfortable. She goes, we need to look at that.
Yeah,
so I resonate with that one, and interesting.
Yeah, well, particularly
we are going to review those.
Yeah, particularly there's like a Tuesday, like for example, we have like the senior leaders catch up Tuesday. Now I actually often don't go to them because I've got other stuff that's far more important. So Grant, because I'm the group CEO, Grant Austin, who you've had on this show, is our Australian CEO. We've just very excitingly appointed a US CEO, a guy called Blake Hutchison. I will drop into those meetings and contribute, but just say a couple of small things, but particularly if someone's at that meeting, but they could spend that time doing something far more valuable, we say to people, don't come. So what we do though, is we do we encourage, and it is great. We have like a Monday distribution of people's key outputs for the week. So I think it's important, particularly for heads of departments. And we've got obviously a CFO and head of growth and product and technology, is just to distribute what they've done for the week, what's going on, because we try and limit them. Some of them are quite lengthy, but I can tell you, I read absolutely every email, whether it's Monday afternoon or Tuesday morning, but by Tuesday lunchtime, I've been through all those emails, which means that I can see if there's any small fires that might need some attention, if there's something which needs a bit more spotlight, or even obviously the big thing, particularly in the Australian culture, which we try and encourage because we don't do probably as well as other cultures, is well done.
Yeah.
Go and take your team out on Friday for lunch on us. Don't you've done something great. Enjoy it.
That was my next question. How do you celebrate the wins?
Well, it's funny, as you know, we had $100 million party. Feels like yesterday. Now we do, almost 100 million a day some days. So we do have a great social team. They've done a great job. We had a fantastic new opening party. It was a Casino Royale theme. We do really encourage the teams to go out and get to know each other. We don't need everyone to be best friends. We know that doesn't happen. And, I'm a big sports fan, as I mentioned before, and love looking into like successful team cultures. And, there are a lot of successful teams where a lot of guys didn't get along socially, but on the field, they were incredible. So we are but I mean, to put it in perspective, that last party we had, not that we measure attendance records, but outside people that were on holiday, it was an unbelievable event. So people are very engaged in this type of thing. And obviously I exit stage left probably a bit earlier than I used to back in the day, but where we are, we're opposite a well-known bar that plays music. A couple of the guys are very well-known and very good DJs. I didn't go to that part of the party. I thought that's probably best that I'm tucked away in bed.
Yeah.
But on Monday, they said the guys who DJ'd, particularly one of the guys who's head of growth, who'd sort of put the decks away for quite some time, came out of retirement.
Wow.
They said he just had the place jumping out of its skin. So,
amazing.
We are very encouraging of definitely our town halls, have a beer, have a wine, or, if it's not a new culture or not, it doesn't matter, have whatever you want. And the other thing which you also do from a cultural perspective, and we did copy this off Adam Swab, is we do put on lunch at the moment once a week. Probably I would like to do that twice a week. We use a kitchen like Adam does. He's got various cultures in his team as well. So we offer all the foods that obtain to all the different cultures where people come from. And the lunch, I think, is just fantastic because, yes, it costs money, but what it does, and I've observed it and spoke with Adam about this at length, is that people are in a queue. Yeah, they're talking a bit about their life, whether it's on the weekend or their interests, but invariably they sit with their team, they ideate, they talk about work, and look, it's not talk too much about cost of living, because living in Victoria or living in a high inflation environment is difficult for everyone. But it's great to be able to help people out by providing with that meal a week. It is funny to work from home because we have to kind of accept it, and we sort of do Wednesday as a bit of a hump day for people to work from home if they want. But it's amazing when you put on lunch. Wow, everyone's here.
Yeah,
so they love that. And we also, obviously, like a lot of Melburnians or Australians, have a big coffee culture. So when we moved to the new office, we used to put on a coffee a day down at a couple of the cafes in Elsternwick where we're based. We're now based in Paran. One of the big things, because we've got a fantastic breakout area with we do town halls and lunches, and there's a pool table and a pinball machine, and we're bringing a shuffle table. We've got a golf green out.
Oh, I love it.
Out on our balcony.
I haven't had a visit yet. I'm going to count. We're going to book that in, Ed. So,
and the big one was the coffee. So a big shout out to Sprout Coffee, who are absolutely phenomenal for anyone that wants office coffee. But one of the big things about that, it is interesting from a cultural perspective, is that Sprout provide us with a barista from sort of 7:30 in the morning till sort of around 11:30, 12. It's great because they've got it's a proper, espresso style machine. We also, Sprout put a couple of push buttons in as well, which actually the coffee, phenomenal. And then there's a big sort of cold brew coffee culture, particularly in summer. So they set a couple of the tricolators up. We've got a big ice machine. So all of those little things, you kind of think, do they mean a lot? Well, they do, because, I observe it all the time. People are in the queue, they're talking. And also we are now in Windsor, as I said before, we're on level 3 and 4. It is a bit of time to get up and down lifts and whatnot. And we don't like productivity watching by the minute, but providing that coffee, that cost comes back to us in multiples, because it just means that people are together having fun. And it's saving them, if you're having couple of coffees a day, what's that, sort of 10, 12, maybe even $15 that people are saving. So across the course of a week and a year, the cost for us is negligible compared to the saving that comes for the staff.
I agree with that. It's funny, we're doing this time of the year is a lot of budgeting and looking into what the next year looks like for a lot of businesses. And one of the questions we always talk about is what's your CapEx, what's your investment schedule going to look like? And the question that people answer that with is, I don't really have any machinery or equipment that I'm going to be investing in. But what you've done is completely the opposite, is, well, you look at this as your CapEx in your people. It is a capital expenditure in investing in your people, and you see it as a correlation to return on investment every single day. So business owners especially, you know, in the times that we live in, if they do invest in people, you can really get that return, and building that culture is obviously for Pay.com has paid dividends. But let's go into the IPO and where we're going with the business. You've launched in America. Take us through sort of the strategy with a bit of couple of rounds of fundraising with rounds of raising funds. Take us through the strategy of potentially maybe an exit, maybe an IPO, maybe the growth plan. What's for existing investors or people that have got a bit of an eye for what's happening behind the scenes on pay.com.au? Take us through what the strategy is for the next coming years.
Yeah, well, thanks for that. Well, there's been quite a bit of press about it, our IPO, and unfortunately, well, not unfortunately, because I think actually in hindsight it's been terrific. We were going down that pathway, and we spent many hours, particularly from November through to sort of February, March, drafting prospectuses and getting ourselves in order. We expanded our board, which has been fantastic because we brought some three great directors on that have maintained their positions. But unfortunately, with the Middle East conflict, the Australian share market, investor market really was impacted on a negative aspect. So we would have sat at a great valuation, would have been circa $700-800 million of equity value at that level. Now I know more than I did pre-November. That's sort of a mid-market space. A lot of the mid-market fund managers have had some very difficult months of trading, and one of our directors who's had vast experience in public markets, both as a CEO and as a director, the place you don't want to be in the listed space is listing. It goes well because I'm sure we would have actually probably been higher on day one or day two potentially. But if you don't have that buyer support post, it makes it very difficult. And in that SME, small, medium company size, ASX 250 or 350 circa, where we would have sat, you can only have a look at a couple of the recent floats that are trading down. And then once you've got no liquidity, negativity, myself and Ed Trick, the CFO, would have spent probably the next 6 to 12 plus months digging ourselves out of a hole. So we'd had roughly 4 rounds of capital pre the IPO round. And one of the great things about the business is for a lot of us, we are accountants. So we are quite focused on the numbers and cents. And, getting back to the cultural perspective, we do treat the capital that comes in really with an enormous amount of respect. We don't waste money, and, we all travel on points and stay in hotels in points. And, we're getting the cheapest possible option, but optimizing it through points, obviously. So we pivoted to a private round. So that was oversubscribed. We raised over $30 million of capital through Morgan's, our broker or our advisor on that perspective, which is a tremendous result. Roughly half for new investors, half for existing. So it just shows you the appetite for the existing investors, which is great. Morgan's run a small secondary sale process. So there's always stock trading on most days. So invariably, we're like a public business. But the advantage of staying private is we don't have to be too far in the public light from the reporting perspective, but also the fact that you can have day traders, sell and buy your stock. Someone has to pay some rent, that has dropped the price, and they don't care. They just want the cash.
Yeah.
So we don't have to worry about that, which has been fantastic. But we also have got the corporate structure, the executive structure, and the discipline of a public company. So if we want to pull the draw out and go down that pathway in the future.
And release that prospectus.
And we behave that way. We actually behave even more stringent than a public company in Australia because we actually report quarterly, as you know. So we have a quarterly update very similar to what occurs in the US.
Yeah.
So we already behave like that. We have an independent non-executive chair. So we tick a lot of the boxes for being public. Our chair of audit and risk is independent as well. Sally Freeman, who's ex-KPMG audit partner. We brought Tony Robinson on as an experienced listed CEO and director of public companies. And then John Hurley, who is actually, as I mentioned before, one of the early employees at Google, LinkedIn, Oracle, on the chair of OpenAI Europe.
Yeah.
So he's brought a huge amount of global perspective to our board, which has been fantastic. And actually going and seeing a lot of the fund managers and our existing investors in Sydney and Melbourne when he was here 3-4 weeks back, they were just blown away by John and his experience and his global output and his connections and his views on companies like the Revoluts of the world and obviously his great stories from the early days at Google and LinkedIn and how you do scale those businesses incredibly fast. So the capital is in the bank. We've got net cash, well north of 50 million now. Our burn rate in Australia is very low. For example, last week we were net cash flow positive, but we continue to invest in growth because we think that this market, we've only really just scratched the surface.
Yes.
And then we're deploying most of that capital into the US. But as John coined it, we are still in the science experiment phase. But we're not just out there with a Bunsen burner and a beaker. We are actually, it is properly running. We're trading every day. We're making transactions happen. Blake Hutchinson, who's just joined us as our US CEO, he's come out of a business called Flipper.com where he did a phenomenal job. They've got offices in Texas, Amsterdam, Melbourne. So he's very used to working in that global space. He's currently in the US, and I spoke to him yesterday. He was like a cat in a hot tin roof with excitement. His meetings and his strategy is really coming to play. Things in the US are really looking promising. I'm there, fly out Monday week. I'm starting to get to know the staff very well on the Sydney to Dallas route.
Yeah.
And we're really enthused, but we are also super conscious that the US has been a graveyard for many companies. It was mentioned before that yesterday, there was Chemist Warehouse or Sigma had announced they were potentially looking at buying Boots UK into the Boots pharmacy chain. And the negativity in the press, even in the Aussie and the AFR, was quite large. It's a graveyard to do this. You're going to rip up shareholders' capital. You've seen Bunnings try and do it in the UK. But if you look at what Bunnings did, and the barbecue one's classic. Traditionally, and I had obviously lived in the UK for some time, so I knew it. There used to be a van that was selling something, whether it was a kebabs or a pie or a coke. Well, putting the barbecue there just alienated the local trader who probably knew all of the guys who were going into the hardware store before, or the family. So even small things like that you got to be careful about. And obviously Guzman and Gomez, I've got a very good friend in LA who's in the food game, and he just couldn't believe they went to Chicago. I've got one of my very, very close friends lives in Chicago. For 6 to 7 months a year, you barely get out of your car.
Yeah.
And they had these suburbs in suburban Chicago. No one was, and also America has a lot of great Mexican food.
Yeah.
You're sort of competing with.
So you got to be very careful on how you enter markets.
Super
like
careful.
Yeah.
And as even when Tesco's, the British brand, went over to the US, I was a failure when they put their metro stores in, because the Americans don't do metro shopping. Not European. You only have to look at their sports events, and when you fly over. Even at the LA stadium near the airport, the car park is double the size of the stadium. They are used to driving, parking, whatever. But the great thing with our business and very early discussions, we've been pulled into that market. American Express has become a massive partner of ours in Australia. They go over to their executive catch-ups, and they've been banging on about Pay.com for many years. So I met up in Toronto with one of their senior guys who looks after every market outside the States, but obviously is very, very clued into what's going on in America. They've pushed us incredibly hard to get into the US. The airline discussions I'm having, they are not with, junior burgers, they're with the key decision makers. We're very close with one of the majors. Interestingly, in America, the airline space or the airline brands are broken down with smaller market shares. So Qantas roughly has 60+%. AA has roughly 20. Delta's like 22. United's like mid-20s. So it's much more spread. And the other thing about the US is that you've also got geographies play a big part. So if you live in Atlanta, you generally fly Delta. If you live in New Jersey, you fly United because Newark's United's hub. If you're in Long Island, you fly Delta or you'll fly AA because that's AA. Detroit is Delta. Chicago obviously is United, given its head office there, as is San Francisco. So the big opportunity is all the airlines are underweight, like a lot of the airlines that we've partnered with in Australia in the they call them SMBs, small to medium-sized businesses in the US. So that's a big tick. There are some similar companies, but no one's got their own currency like us. That's sort of, I suppose, Switzerland for points or payments, as we like to coin ourselves. And we won't. We will integrate with any accounting software. So Melio, which has been a big acquisition by Xero, and obviously Xero's really struggled to penetrate the US market because it probably comes back to my point before. If you go and tell your accounts team that we're changing accounting software packages, it doesn't really go down well.
So and Intuit's got a really
Intuit is 70% plus. Not a lot of people don't know there's more cash on Intuit's balance sheet than market cap of Xero in whole.
Yeah.
They could swallow Xero tomorrow if that.
True.
So Melio, which is a similar platform to us, is tied to Xero. So Intuit's not going to partner with them. We're in great discussions with Intuit about making sure we're fully integrated with Intuit. So we're really planning the business in a very go slow to go fast. So I suppose.
Is it a bit of a replication of how you did it in Australia? Is it sort of looking at it as a completely like a startup? We know what we know, and we know the platform works, but you're not just going, here it is, spend millions of dollars on digital ad spend. It's very,
Well, over there, for example, it's very sector specific because you got 33 million SMEs. So, for example, there's a great point of sale. It's a bit like that theory if you see a car on the road when you buy a car. So if you buy a Volkswagen, you start seeing Volkswagens everywhere. It's like something in you that goes on inside your sensory systems inside your brain. There's a business out of Boston called Toast. Now, Toast does pretty much 90% of the point of sale for cafes and restaurants in the States. Someone told me this because, mate, every time you went to buy coffee or you had food or bloody toast is everywhere. So, for example, you'd partner with a Toast for the cafe/diner market. So there's a lot more deeper partnerships because you've got 400 odd million, 350, whatever the population is, but 33 million SMBs. You can be focused in just on one. You can go narrow and deep. While in Australia, you have to go wide. Because we're just, if you just focus on cafes, yes, there's a lot in Australia, but there isn't enough to make it
viable and scalable.
So we're big on partnerships. We are absolutely protective of the capital. We're not just spending it for the sake of spending it. We're definitely following the digital strategies are working. We've got over 3,500 businesses that have come through the funnel already. So we know there's the appetite. But before we went and raised more capital, whether it's IPO private or introduce, if a trade or a major player in the market was to come in and take a strategic stake, which we, as a board, we've got the duties, of course, for our shareholders to always assess every opportunity that comes down our pathway, is that we'd love to see, or I'd love to see, some really interesting KPIs before we go and launch more capital. So what I mean by that is you'd love to see kind of like the types of businesses that are coming through, what's the annual transaction size per customer, with pay rewards, which airlines are they starting to push their points out to? What's the split between Visa, Amex, MasterCard? Over there, bank payments called ACH. So what's the split between those different sides of things? So we've definitely said to Blake, there will be more petrol to come to put on the fire, but we want to make sure that when we do, put that petrol on the fire, it's going to go nuts, rather than just be over there to say, oh, how cool is it? We've got an office in America over there. And I think at the moment with the brand and what we've already built over there, it's already a platform you could probably approach Xero and sell it to them today. So we're always making sure that what we're creating is just not something that we have to shut up shop and pull out of. It's got scalable already, so it's a great business. It's a very small team, and again, we're not out there just employing people for.
How many staff?
So there's around 8 to 10. No,
in the US,
US. In Australia, it's about 140, 160. We've got some IT teams in Vietnam. So and then always sort of harking back to interesting entrepreneurs. It's a bit like Richard Branson always says. Once you're above that kind of 200, it's very hard to know a lot of people. You go to the Christmas party and you're kind of like, half. So we do like to go to the parties and have great conversations. And, again, back to the culture side of things, we've lost very few people. And a lot of our foundation employees are very much there and thereabouts.
I have to say, it's been an amazing journey. Being the accountant behind the scenes, I want to say thank you for bringing me into some of those early conversations in the boardroom. We were fortunate enough to get in early as an investor as well. So I just want to say, I met you at the M&A Partners Days. We're excited. Back then, I remember meeting you for the first time, and one of my clients walked in and said, Sevan, I got to get out of this business. I don't know how to sell it. I need to sell it. And it was about 6 months prior I'd met you, and I said, look, I don't know what to do. I don't know how to sell a business. I'm an accountant. I wanted to put your ad in a fin review or something. And I said, hold on a second. I think I might have a guy for you. And I pulled up the drawer and I had about 150 different business cards, and I found your card, Ed. And I reckon it was the first time I've spoken to you since you did that pitch to us around M&A Partners. And then we did that deal, and we did another deal. And from there, we've been long-term friends, separated at birth potentially. But I just want to say thank you for trusting Alexander Spencer in all pointhacks.pay.com. And we've been amazing to see what you guys have done. I'm excited to see what the future holds, and the future could be anything for this company. And I can't wait to see what happens. Thank you for your time. And if you haven't yet, pay.com.au it. as I say it on SEN, go on the platform and have a play, because we're a big believer on the product and it does really serve a purpose in that SME market. So thank you for taking this business, leading it the way you have, and you're an amazing leader, obviously, in what you guys have built with yourself and Damien and the team. So congrats, and thank you for your time on the bottom line.
Thanks, Sevan.